Speaking of banks, this weekend we'll get official word on just how sick or not so sick some of those European banks may be. Regulators will release the results of a stress test, and it's something the global markets will pay close attention to. Michelle Caruso Cabrera reports.
The European Central Bank and the European Banking Authority released the results of two sets of tests of roughly 130 banks across Europe on Sunday. And those results are supposed to show the quality of the assets being held by the banks and also whether or not the banks have enough capital to withstand losses during times of crisis and bad economies. One of the key questions, will the test be rigorous enough, credible enough? In previous years, we saw banks in Europe fail and need government bailouts, even though they had supposedly just passed a stress test a few months before. Today, Reuters reported that they have seen an early draft of the results and that 25 financial institutions failed and that 10 need to raise capital. These are believed to be smaller banks that aren't systemically important. Those institutions will be given time to raise more capital and clean up their balance sheets. The banking regulators promise a deluge of data on Sunday that will be available to journalists, analysts, and the public so that everyone can assess for themselves the health of those institutions. Once this hurdle is passed, market watchers hope there will be an increase in lending in the Eurozone in an effort to kickstart the extremely weak economy there. Many analysts believe the banks have been hesitant to lend because they wanted to retain as much capital as possible to be sure that they passed the stress test. It will be key to watch how European markets trade on Monday. That's going to give us a clue as to whether or not investors think the test will have the intended effect. If investors have doubts about the quality of the test, we could see shares of the banks move lower, and also in the long run, that would also mean a slower recovery for the European economy. For Nightly Business Report, I'm Michelle Caruso Cabrera.